Hi, everybody, and thanks for joining us for our second session of day two of the 2024 Cherry Bekaert Government and Public Sector Virtual Conference. My name is Christian Philgraff, and I'm a partner here at Cherry Bekaert. I lead our government and public sector industry practice. I hope you're planning on joining the next session this morning and this afternoon for a virtual conference as well. We've had a great couple of days, and it's been great to have you with us. The topic for this particular webinar or session is crafting an impeccable ACFR and tips for modernization. We'll look at the most common ACFR preparation mistakes and provide tools and resources to help your government avoid them. We'll also share some innovative ideas on how to reboot or refresh your ACFR's clarity and readability. So just jumping right into it, and pleased to introduce our speakers today, Director Scott Anderson and one of our leadership partners, Lauren Strope.
Thank you, Christian. Happy to be here. Thanks for having us, and glad that everyone was able to attend today. We are so excited for this topic, so excited to be part of this conference. Again, my name is Scott Anderson, and a lot of you may know me. I'm actually celebrating my 19-year anniversary with the firm this week, and I am what I like to call a recovering auditor. Spent most of my time as an auditor. I relapse from time to time, spent a lot of my time doing quality reviews for audit teams. I counted more than 60 financial statements for governments that I reviewed last year. And on the advisory side, I spent a lot of time helping governments craft their financial statements and improving them. Have a few projects where I'm just looking to improve rather than actually assist in drafting. Lauren, give us more information about yourself.
Hi, everyone. Good morning. My name is Lauren Strope, and I'm a partner here with Cherry Bekaert. I sit in our Tampa practice, but I serve local governments really throughout our footprint. And unlike Scott, I'm not in recovery, so I am still an auditor. I kind of try to count up a couple days ago while preparing for this presentation how many ACFRs I've actually looked at in terms of both my career and then just as a volunteer reviewer for the GFOA. And I think we're entering into the thousands mark. So very excited to be here with you today and to talk about this topic.
Perfect. Well, we came up with a very snazzy title for our session, Crafting an Impeccable ACFR. But that is a bit of a misnomer. We have no desire to strive for perfection. Perfection is the enemy of good. Perfection is the enemy of done. And so what we're really looking for when we talk about crafting an impeccable ACFR is crafting something that is relevant and reliable and timely, and something that users can understand and consistent and comparable. And there is a nice balance with all of those characteristics that will help our ACFR be as useful as absolutely possible. So first, we're going to start with an introduction as to what an ACFR is. Now, an ACFR is not something that is required. Not every government puts together an ACFR. However, if you do put together an ACFR, or you call something an ACFR, GASB does prescribe some very specific elements that should be included in order to refer to it as an ACFR. And it contains three main sections, which are the introductory section, the financial section, and the statistical section. We've got our first polling question. Does your government issue an ACFR? Yes, we do it for the GFOA award. Yes, we do it to provide our citizens and our users with the most comprehensive information. No, we don't, or I don't work for government. I know we have some folks on here who actually don't work with a government professional services or with Cherry Bekaert. Also had a question in here while we're waiting for that poll to populate that I decided to take out. But how many of you are ACFR reviewers for the GFOA? GFOA is looking, and they actually publish a list of who their ACFR reviewers are. There's about 130 of them on that list. And if you think about, I think they said 4,000 ACFRs get submitted. That's quite a few ACFRs for 130 people to review. So they're always looking for more help there. All right, so here's the poll. Looks like a large majority of you do create an ACFR or issue an ACFR. 26 do it for the award. Lost it. And I think it was about 40 did it for, there you go, 42% for the just for the for users, and then 13% do not issue it, but just do financial statements. All right, so again, introduction to the ACFR. Three main parts. The introductory section is at the beginning, provides general information for the government. This is the part where you can really say anything you want to say. As the auditors, we review it only to make sure that it's not inconsistent with the rest of the financial statements, but there's a lot of room and flexibility. And I think a lot of governments like this part because they can say what they want to say. The financial section is the part that gets the most attention from the auditor. The basic financial statements, which includes the notes. Your financial statements are not complete until there are notes to those financial statements. And then the required supplementary information, which includes the management's discussion and analysis, certain required schedules for pensions and OPEB, your budget to actual schedule, your if you use the modified approach for recording infrastructure, and that also includes other supplementary information, the combining schedules for non-major funds. And then the statistical section is last from GASB 44, prescribes specific things in a 10-year trend that allows users to have a little bit more perspective. Is everybody able to hear me all right? And can see my slides? Okay. I want to next talk about the financial reporting model. GASB just issued a new statement 103, and 103 is not applicable yet. It's not effective for a couple of years, but it is very relevant to this topic. It was an opportunity to see where the GASB found that financial reporting can be improved. They took to revisit the financial reporting framework. They started in 2015, so GASB 34 had only been in effect for less than 15 years when they started looking at it again to make sure it was doing everything that it was supposed to do. And so we didn't have time to cover it yesterday in our GASB update. We thought we'd cover it today since it is all about improving financial reports. But that guidance includes these main topics: the management's discussion and analysis, unusual or infrequent items, presentation and of proprietary fund statements, major component units, budgetary comparison information, and stat section. So we're not going to talk about all of these. Unusual and infrequent items, for example, and statistical sections, very specific guidance that we won't address here, but we will talk about the others. Management discussion and analysis is probably the most important part from a user's perspective, from the everyday user. I remember sitting in a presentation with a city council, and the finance director gets up and tells the city council that if they're not going to read the entire ACFR, if they're only going to pick one thing to read, they should read the management's discussion and analysis. And I thought that was odd because, you know, as an auditor, that's the least important part to me because I pay more attention to the basic financial statements. But the management discussion and analysis is really designed for the everyday reader, the person who perhaps is not informed in all things government finance and doesn't have the same perspective. And it's really the management department's opportunity to explain what they want to explain. This is kind of my word cloud. This slide it describes I took the first paragraph in 103 talking about it and different little snippets of what you should know about the management discussion analysis. It should be objective. It should be easily readable. You have an opportunity to explain. Users may not have a detailed knowledge of government accounting and reporting. It should be fact-based. Most important, you should explain why. So when we do these analysis and you explain that there is a difference, one of the huge deficiencies that GASB noticed in the implementation or the following of GASB 34 was that there wasn't a lot of explanation as to why things changed, why numbers moved, why the trend. And so that was a focus on 103. You are to avoid unnecessary duplications. When you're explaining a variance in the government-wide statement, when you get to the fund statements has the same variance, you shouldn't explain it again. You should just reference, and should avoid boilerplate. So anything that you can just copy and paste and put in any other government financial statement probably shouldn't be in there. To an extent, there are some things that are required that can be boilerplate, such as the explanation of the statements included. But for the most part, you should avoid boilerplate. If you hire a professional service firm to draft your financial statements for you, and that firm does your entire MD&A for you, it's basically boilerplate. It should be something that a professional service firm does not have enough context to be able to complete, and it should largely be done by the management of the government, even when you're hiring somebody else to draft your financial statements for you. Some of the topics that are included, remember, management discussion analysis is required supplementary information, so you are not allowed to include anything in there that's not required. If you did, it would no longer be required. Supplementary information. So the name says you got to only include what's in there, what's required by the GASB. And I think GASB 103 puts a little more emphasis on that fact. But these are the main topics. You are to include an overview of the financial statements, a financial summary, the statement, a detailed analysis that includes both overall financial position and that of the major funds, and then significant capital asset and long-term debt activity, and then currently known facts and decisions. And if you look and compare that to what was required in GASB 34, you will notice that a couple of things are missing. One would be the analysis of budget variations. We'll get to this in a second, but no longer will the budget to actual be included in statements. It would have to be included in required supplementary information behind the notes. And that section also has its own notes. And so any variances to the budget would be included in notes to RSI rather than here in the MD&A. And then also the discussion on the modified approach would also be excluded from the management discussion and analysis now, because that's also an RSI item. And so notes to the RSI would have that discussion. Next, I want to talk a little bit about proprietary fund presentation. There is a difference now between, and this is somewhat of a significant difference if you are a proprietary fund or a business type activity, and you present following the format previously following 34, where you have operating revenues, operating expenses, non-operating revenues, expenses, and then capital contributions. That format has changed. If you can progress the slide, I've highlighted some portions there. So now we've got the section called non-capital subsidies. We'll talk about subsidies in a second, but subsidies becomes a very important part now of the presentation for proprietary fund. And the capital contributions, as previously shown, are now going to be included in this other non-operating revenue and expenses. So that's one of the main difference. The prior guidance, if you can forward the slide, did not require a specific definition of operating or non-operating. Governments were allowed to pick their own policy as to what that meant. And for the most part, industry groups did a pretty good job of being consistent, but the GASB decided that overall across governments, there should be a consistent understanding of what operating and non-operating is. The decision that was made was to define non-operating and then define operating as anything that's not operating. That's something that you'll see from time to time in the GASB literature, because you don't want to exclude any scenario or any situation. And so defining one side and then defining the other side in the negative helps to capture everything. So non-operating includes subsidies received and provided, contributions to permanent and term endowments, revenues, expenses related to financing, resources from disposal of capital assets and inventory, investment income, and expenses. So if it's not one of those 5 items, then it will be considered operating. Subsidies is a new term. If you could advance the slide, we've got that definition. So a subsidy is resources received without directly providing goods or services in order to reduce rates, or the opposite, resources provided without directly receiving goods or services. So it kind of defines non-exchange transactions. So anything that you receive in a non-exchange transaction or pay out in a non-exchange transaction would be included as a subsidy. Same with all transfers. The next part of GASB 103 to think about is the presentation of major component units. Discretely presented component units are reported separately from the government-wide. They're in its own column, but you are required to separately report major component units. Major component units are those component units that are significant to the government or for which there's a significant financial benefit or burden, or that users of the financial statements would find particularly significant. And so those are required to be separated out. And in GASB 34 and GASB 14, there were really 3 options for doing that. You can either report them separately on your government-wide statements, or you can include a combining statement in your basic financial statements, or you can present condensed financial information in the notes to the financial statements. GASB 103 takes away those 3 options. You have really 2 options, and there's a emphasis on the first option, which is to report separately on the statement of net position and activities your major component unit, and then only if it's not readable, if there's too many, if it makes everything too small and illegible, then you have the option of them presenting a combining statement of major component units or basic in the basic financial statements. GASB 103 also changes how to present budgetary comparison. Under GASB 34, governments were strongly encouraged to reflect this budgetary comparison information as part of required supplementary information. The budgetary information required for government funds and major special revenue funds that have legally adopted budgets. But there was an option to include them in the basic financial statements, and a lot of governments took that option. I know where I'm at in North Carolina, that's kind of the rule, to put your budget to actual schedule as part of your basic financial statements. And now that rule is being removed, or GASB 103 is not giving that option anymore. The budget to actual should be presented in the required supplementary information. And then again, as we mentioned with the MD&A, any significant variances between the original and final budget and between the final budget and actual amounts should be explained in notes to the required supplementary information. So just taking that piece that previously been in the management discussion analysis and putting it in the notes to RSI. All right, so here's our second polling question. How do you currently report your budgetary comparison information? Understanding that not everybody's required to do that, but if you are, is it in your basic financial statements, or is it in your RSI? And if it's not applicable, either because you're an enterprise fund or some other reason, or again, don't work for government. Give you just a few more minutes. I don't see any questions in the Q&A yet, so we'll just let you answer this slide. Perfect. So most of you who do present them, 42% showed as RSI. 29% of you put it in the basic financial statements. I wonder how disruptive that will be for you to have to move them to RSI. I wouldn't think so. Maybe even be easier to do. But that's the rule change that you just need to be aware of. So What does an ACFR refresh look like? Again, we just covered 103. We're going to start getting into the notes to the financial statements. But what is recommended is that an ACFR refresh is performed periodically. I would say at the beginning of your ACFR season that somebody looks at your ACFR to make sure it's still doing what it's supposed to do. But it's not a bad idea to have someone outside of the compilation process take a critical objective review every once in a while. Maybe not annually, but every couple of years. Part of this review should take into account who your actual primary financial statement users are. There are some broad categories of users, but not all apply to every government. So understanding who it is that actually requires the information in your financial statements and having that understanding might frame what type of information you should have in there. Identify redundancies and non-essential information. If it doesn't need to be in there, if it doesn't have to be in there, GASB doesn't require it to be in there, perhaps take a hard look at why it's in there. Evaluate the form and presentation effectiveness. If you have to disclose certain things, is there a more effective way to disclose it, make it easier to read? And typically this type of review is performed off season. It doesn't have to be. As I mentioned, I do a lot of quality reviews, and I happen to know that by the time I get the financial statements, any suggestions for improving are not very well received, right? Because you're trying to get your financial statements out, and all you really want from me at that point is what has to change, not what could be changed in order to make it better. So typically, before you roll into the busiest part of your year, would be a good time to take a look at your ACFR to do a refresh. So what does the GASB say about financial statement notes? And I think this is a somewhat revealing thing to think about and to understand. GASB issued Concept Statement 7 back in June of 2022. Concept statements are not authoritative. There's nothing for you to do as a preparer to apply Concept Statement 7. However, Concept Statement is something that is helpful to understand. It helps frame how you should look at notes, explains what should be in notes, provides information, explains that information should be essential. Looking at Concept Statement 7, it says the primary objective of this concept statement is to establish concepts for evaluating whether information is appropriate for disclosure in notes to financial statements. Again, not authoritative for preparers. However, it also says the fundamental concepts also may be used by preparers in understanding the conceptual foundation for notes to financial statements. So I think it's helpful when you do a refreshing, when you're reviewing your notes, to decide if they need to stay in there or be changed or modified or improved, to think about what Concept Statement 7 says about the purpose of notes and how we should be thinking about it. So this one word that gets used quite a bit within Concept Statement 7 and at the GASB when they evaluate new requirements for disclosure is this word essential. And so Concept Statement defines what essential means. And since essential is a degree of importance that the information should possess. Something is essential if it has a meaningful effect on a user's analysis for making decisions or assessing accountability. And the GASB actually goes out and asks users. Anytime they're about to propose something new, they will ask a user, is this something that will impact your analysis to help land on what is essential? Also, essential means that there is a breadth and depth of users who will utilize the information. So sometimes I will see a note, knowing that it's not required, I'll ask why it's in there. And the response is, well, a question was asked by the city council that we couldn't answer in our financial statements. And so we added this note. That's great. You're allowed to have that in there, but it probably doesn't meet this definition of essential since it's specific to one user rather than a breadth and depth of users. Concept Statement 7 also talks about who our users are of the financial statements. We, of course, have citizens, we've got investors and creditors, and we have legislative and oversight bodies. Those are broad categories. There are many different users within those categories. But the reason why it's important to know who the users are is then we can evaluate what type of information needs that they have. Users for financial statements, for basic financial statements, and for the notes, are supposed to be relatively informed. We're not thinking about the average everyday citizen who has no understanding or no background in governmental accounting. We're thinking about someone who is reasonably informed, who has the responsibility to study the information with due diligence, and applying relevant analytical skills. And that helps because it means you don't have to spell everything out in your financial statements. You can trust that the user of that information knows how to use the information, knows how to get more information if they need it. And I think that's somewhat liberating as you think about how you explain things in your notes. There are certain criteria to think about when deciding what to disclose in the notes to your financial statements. The type of information to disclose includes descriptions of your accounting policies, more detailed explanations about items that are recognized in the financial statements. For example, you may choose to aggregate information on the face of your statements. The notes would be an opportunity or the place where you would disaggregate that information or provide explanations that might be necessary. Information related to your inflows and outflows that do not meet recognition criteria. So those explanations would be in the notes. And then any other finance related information associated with accountability of the government. It is inappropriate in the notes to provide subjective assessments of the effects of information and predictions about the effects of future events or future financial position. So no projections, no predictions, no opinions, nothing like that are appropriate in the notes. It's also not appropriate to include any general or educational information that is not specific to the government. And this is something that I see quite a bit where a note describes the requirements of GAAP, which isn't necessary. That's an educational a specific thing. You don't need to explain what GASB 14 says about component units. The requirement is just to describe why a component unit is included in your financial statements, but not to explain the criteria specified by GASB 14, for example. And that's something that I see quite a bit actually where GAAP is being explained in the notes to the financial statements. Other things to consider with regard to notes, financial reports should not be considered the sole source of information. You put a lot of pressure on yourself when you think that it's up to you to inform the user about everything. I wonder about when we disclose some of our pension notes and our OPEB notes, we put a lot more information than is actually required, and probably not necessary when those pensions and OPEB plans have their own financial statements, and we are required to reference those financial statements. So think about that you don't have to be the one to break every breaking news to all your users. So you have less of an obligation there. Also, understandability is one of the qualitative characteristics of financial reporting. So notes should be presented in the most understandable format. I don't know about you, but when I'm reading technical content, if it goes past 100 pages, you start to lose me. And so sometimes when our financial reports are voluminous, have a lot of pages, have a lot of notes, the understandability decreases. And so finding a way to say something concisely is definitely within the spirit of Concept Statement 7. All right, now I'm going to let Lauren take the reins and talk a little bit about some of the common errors identified in ACFRs. And these are common errors identified through the GFOA ACFR program.
Thank you so much, Scott. And just to say once again, ACFRs are the annual comprehensive financial report. So let's get right into some of the common errors the GFOA identified during their reviews. And just to kind of get a feel for what everyone's thinking, which ACFR category would you guess yields the most errors, or at least yielded the most errors last year during the review process? Would it be management's discussion and analysis, note disclosures, the statistical section, or the basic financial statements? Maddie, do you have the... Oh, perfect, here we go. Here are the polling responses to number 3. And so it looks like the majority of you think it was in the note disclosures, but actually, shockingly enough, it was in the statistical section where the majority of the errors were. And I have my theories behind that. And we'll get into that in a little bit.
Lauren, do you have the specific numbers?
I do. So in the statistical section, it was 2,563. In the note disclosure section, 2,220. In formatting and terminology, which is kind of included in that, 2,051. The MD&A had 1,307, and the basic financial statements had 1,259. All right, so specifically as it relates to formatting and terminology, these are kind of some of the big ones that kind of kept popping up. So we just kind of wanted to go through those with you all because I know you have absolutely no errors in your ACFRs at all, but these were just, again, some common ones that people found in the review process. So the first one is obviously we have all implemented leases. We all had a really fun time doing that. But because of that, we no longer use the term capital leases. So just make sure that you're going through your ACFRs and changing all of those to be either those right of use assets or the lease liability, if that's what you're describing there. The second is the actual report name itself. I don't know about you all, but when this one was implemented, it was 2020. There was a lot going on, so I think that's why it's still coming up. But it used to be the Comprehensive Annual Financial Report. The acronym for that sounds very similar to a word that we should not be saying. So the GFOA did change that to the Annual Comprehensive Financial Report. And the GASB and GASB 98 went ahead and solidified that. So now it is referred to as the ACFR. Kind of the third one we wanted to mention still shows up in investment footnotes, although with GASB 31, it's been a while since this terminology has changed, but we don't want to say that anything is at market value, it's at fair value. So make sure that, that update is being made because market value really just isn't terminology that should be used anymore. Total OPEB or pension liability versus the net pension or OPEB liability. So I know we all have so much fun with pension and OPEB and all of the disclosures that go along with it. But be careful on your face financial statement and then in the statistical section when you're referencing either the total liability or the net liability. So that total pension or OPEB liability is that liability that's calculated by the actuary. But if you're in a situation where your plan is funded and it's in a trust that meets those particular requirements, you would actually be showing a net pension or OPEB liability, which is that liability net those assets held in that trust. So just make sure that you have the correct terminology used on your face financial statements. Fund balance or fund net position instead of fund equity. So we are done with fund equity. That is gone. And so if you're dealing with a government fund, you're going to have fund balance. If you're dealing with proprietary funds, you'll have fund net position, but in no place should you have fund equity. So again, you can do a quick search there and make sure that you have all of that updated correctly for 65. And speaking of 65, improper use of the term deferred. So deferred really went away in terms of government accounting, except for the deferred inflows of resources and the deferred outflows of resources. That's really the only time that we should be talking about deferreds. So things like deferred revenue don't really exist anymore. For that, you might want to use unearned revenue or advances. So again, I would just kind of do a quick search for anytime you're using deferred and make sure that you're not using it improperly. And Scott, I think you had mentioned something to me the other day about premiums and discounts as it relates to this.
Right. And just like how deferrals do not get amortized, premiums and discounts don't get deferred. Right. So that's usually where I see it, where we're talking about a non-deferral item being deferred as when it's being described in the notes.
Perfect. Thank you. All right, so the statistical section, and I'll give you my theory on why I think there's so many edits here, is the statistical section, as Scott mentioned earlier, is unaudited, much like the introductory section. But the introductory section, I think, gets a lot of scrutiny. You have folks signing the transmittal letter, and so I think that is very much updated. I think sometimes the statistical section is not, specifically as it relates to new standards that roll out that have been implemented in your basic financials. And this is an example of that. So for instance, in your statistical section, you do have to have your ratios of outstanding debt, and those should include leases. And before the questions start rolling in, yes, it should include any SEBITA liabilities that you have as well. So for example, if we look here, you can see that the name of the government has total overlapping governmental activities debt of that 79.76 million. And just to make sure you all believe me, we went ahead and that's how you summarize it. And you can clearly see that leases is included in that calculation. So make sure once again that you are including any leases or SEBITAs in your outstanding debt calculations in the statistical section. Also, your debt capacity schedules in the statistical section. A question that's commonly asked is, should the outstanding debt and general bonded debt be presented in the schedules as gross principal outstanding or net of discounts, premiums, and other adjustments? And really, everything should tie back to the basic financial statement. So it should agree to the amounts that you have in the basic financials. And those amounts would include the discounts, premiums, and other adjustments. So long-winded way of saying, yes, you would include them. But the moral of his story is make sure everything ties back to what you're presenting in your basic financial statements. All right, I know this is incredibly hard to read, but don't worry, I have a slide coming up where you can see it a little bit better. But this was one that was commonly identified and I think commonly missed by folks. And that is your total debt service to non-capital expenditures. And that number should be basically your total debt service, so principal and interest, divided by your total non-capital expenditure, which is going to be all of your expenditures less any capitalized or capital outlay expenditure. So this is that fund percentage that we're calculating here. And when we blow it up a little bit, you can see that calculation a little bit better. But right here is really what we're talking about, where you have your total expenditures, the total capital outlay that you'll back out. And then again, the number on top is going to be your principal and then your interest. And again, you're going to divide that by your total capital expenditures less your capital outlay. So again, a pretty easy number, but I think it's just something that over time, folks have not gotten the calculation correct. All right. So in the basic financial statements, just a few, again, overall things that the GFOA reviewer saw is normally if you were to have any net position, net pension, OPEB, or uh, net pension or OPEB assets, oh my goodness, I'll have to say that 5 times fast later, would result in a restriction of your net position. And if you think about it, that makes sense. Generally speaking, you have that asset because you have that trust that's associated with it, making it that net. And if it's in a trust for the pension, it is a restricted asset. So it would make sense that any asset would result in a restriction of your net position amount. This one comes up a lot. Your total pension or OPEB liability, it should have a current and non-current portion. Sometimes the non-current portion can kind of be immaterial to the whole, but if you think about it, you do have a non-current portion or amount that you're going to pay out in the upcoming year related to these sorts of liabilities. So it makes sense that you would have a current and a non-current piece of it. I know that you all are all really excited about net investment and capital assets and that fund calculation that you get to include each year to the GFOA. And I think that was part of the reason why is because it was very difficult for folks to calculate the net investment and capital assets amount kind of without that. And additionally, there was a lot of variation in how folks were calculating this. But just keep in mind that you want to include all capital assets reported. And yes, that is going to include any leased assets or SEBITA assets, all of your right to use assets. But the calculation should exclude any accrued interest. So make sure you're doing that. I would just highly suggest, especially if you are in the review program, that you are filling out that calculation as you prepare your ACFR and really using that to support the amount that you're showing there. All right, so major fund calculation should be analyzed and updated every year. This is incredibly important. Obviously, your entire ACFR's presentation may change based on a fund that wasn't major last year becoming major this year. And additionally, your auditors are going to have to opine on all your major funds. So we want to make sure that that's presented correctly. So make sure you're doing that every single year. And again, as it relates to GASB 100, this is what can kind of create those ghost columns that people have been talking about. So this would actually be considered an accounting change and error correction under GASB 100, which is just a change within the reporting entity or change to or within the reporting entity, including fund presentation changing from major to non-major. And I see, Scott, you want to comment on the ghost columns?
Well, not the ghost columns itself, but it's never a problem to have too many major funds. If you report something as a major fund, that's not a major fund. But when it goes the other way, that is grounds for you not to get your GFOA certificate. But I will say, in the spirit of improving the financial reporting and refreshing, it is a good idea to make sure that the ones that are reported as major funds are major funds. If they go back and forth, leaving it as major is the best idea. But if it's something that's not major anymore and likely never will be major, making that move to non-major makes it easier for everybody.
That's a great point. Thank you. And then just remember in your cash flow statements, you should provide any information about non-cash investing or financing that affected the changes in any of your assets or liabilities. So that's where that would be reported. Okay, so in the notes to the financial statements, this first one, I would be surprised if Scott didn't pop back because I know this gets him every time. But for deferred inflows and outflows, they represent a consumption and acquisition of net asset. I think when GASB 65 came around, a lot of us did a quick control, find, and replace for net asset to net position. But it's not net position in this case. It's a consumption or acquisition of net asset. So, and there he is. I knew it would happen.
I only got on because you prompted me to, but you know how I love the GASB concept statement. Concept statement 4 does a great job of explaining why it should still be net assets and not net position.
Awesome. Remember, if you are a lessor and you have a receivable future payment schedule, if it's an ongoing operation, you're going to want to include that in your footnotes. So just make sure that that's there if it should be. The disclosure and purpose of interfund transfer should be specific rather than generic. So that was something kind of along the lines of what Scott covered in the MD&A before, where they just found that it was a very generic description of the purpose for some of the transfers, and they would prefer it to be more specific to what is actually going on within the entity. All right, so in the notes to the financial statements, please remember that any right to use assets should also be disclosed by a major class of underlying asset. So for instance, if you had buildings that were right to use, you would want a separate line item for that. There we go. So right here, you can see the right to use leased equipment, which is going right under the regular equipment. Deletion should make sense. And what we mean by that is sometimes what we'll commonly see is this at the 935 number will actually be lower than the 925. So what I mean by that is the entity will actually be removing more accumulated depreciation for its deletions than it is the actual cost, which obviously doesn't make sense because you can't depreciate more than you have. So make sure that you're looking at that, making sure that your deletions do make sense. If all of the capital assets are of a given class are fully depreciated and you're still using it, you really should reevaluate your estimated useful lives. I think that also goes the other way too. So for instance, if you had given computers a useful life of 5 years, but you noticed that, hey, every 3 we're really having to replace these, you really need to go back and look at that. And really, you should be looking at all of your estimates on an annual basis. All right, on this one, just make sure that you are including all of your liabilities on the long-term liability roll forward. We've had a couple new ones come into play this year, last couple years, being leases and subitas. So make sure if you have any new liabilities that those are properly being put through that footnote.
And just really fast, going back to that, you're not required to put it all in the same footnote. You can have your own lease roll forward in a different note if you want to. To us, it makes sense, though, to put it all together. This is the same requirement that comes from GASB 34 to show the activity. And so that's why I think it makes sense to put it all together like that. Time for our shameless plug, right? I do a lot of work with governments helping to improve their financial reports. I always tell people that putting together a government ACFR is probably the funnest thing there is to do as a government accountant. The only problem is the time period in which you have to do it is always the worst possible time to have to do it, right? You've got so many other pressures, so many other things that you have to worry about that you can't really take time and enjoy the process. So that's where we come in. If you do need some financial statement assistance, and that includes a wide spectrum of things. We either take over the entire process of preparing the financial statements. We also do some financial statement improvement projects, which can be at any level, either just reviewing a PDF of the prior year statements and giving you some notes or pointers, or even taking the Word version and tracking some suggested changes throughout to improve the overall understandability of the financial statements. So please keep us in mind. And that gets us to our last polling question. Would you like for a team member to reach out to you after today's webinar? Now, I do see your question in the chat. Can you discuss your view on presentation of lease activity as lessor in the statement of cash flow for governmental entity whose business lease it to third parties, it seems it should be financing activity, or have you seen different? That is a great question. And I have a Q&A. Given that we don't have time right now, but I'll reach out to you afterwards and I'll provide some guidance on that.
And with that, I think we'll end up wrapping up today's session. And just say, as we concluded, thanks for joining us. If you have any questions, definitely please reach out to the team with any of those questions you may have. As Scott and Lauren just mentioned, we value your feedback and ask that you do take part in a short survey you'll receive when you leave the session. It's really important for us to get your feedback and your comments on what we can do to improve this for next year, as well as the webinars we do throughout the year. And just a reminder, please check the registration site linked in the chat for the next session today, with recordings being available in about a week. The next one for today is at 12 Eastern on managing cybersecurity risk in the public sector. Thanks everyone for joining us or rejoining us, and I hope you'll continue with us for the next few sessions today, and hope you have a wonderful day. Thanks.